Welcome back. You're watching us here on Halftime Report. The Nifty Bank now surging as we speak, up around 500 points at the high point of trade. And we also have strong numbers coming in from AMI Organics. The chemical space has been in focus, a 43% revenue growth, and that reflecting all the way under the bottom line where, there has been a positive profit as against loss in the same time last quarter. The EBITDA has almost doubled, and the street is rewarding that. A big surge is what we've seen in the stock price, up 11% as soon as those numbers hit the wires. Margins at 20%, 40 versus 14.4%, and net profit of 37 crores versus a loss of 19 crores at the same time last quarter. 43% jump in the revenue, resulting in the EBITDA doubling as well. But speaking about numbers itself, another good set that came in was from Arvind Smart Spaces. Good bookings growth. However, we did see the collections fall year on year in the second quarter. Let's, get to the management. We have Kamal Singhal, who's the Managing Director and CEO, joining in. Thanks a lot, Mr. Singhal, for joining in. Wish you and your team a very happy festive season ahead. On the bookings front, first half, you've done nearly 666 crores. You were looking to launch around 23 to 2,500 crore worth inventory in the remainder of this year. When you said to us very recently when you joined, what's the guidance of bookings for this year? Will you be able to do the 30% growth that you're targeting in the second half this year?
Yeah, very good. Good afternoon, and wish you very happy Diwali to you all as well. As we said, we are very hopeful that as we talked last time, a growth of over 30%, 35% should be achievable, and we are on track to do that. First half has been great. This quarter has been great. We've had a very healthy growth of 26% in bookings for this quarter and 32% for this half already. And we are hoping that the rest of the year will go the same way and we'll be able to touch this 35% growth target for the year as a whole.
Mr. Singhal, good afternoon. Festive greetings to you. You've mentioned that you're targeting around 23 to 2,500 crore, right, worth of inventory launches this year. What has been the number in the first half, and what would you be expecting to surpass the target that you have given in the second half based on the first half number?
So we have launched around 900 crores worth of inventory in the first half, and we are hoping that in total we should be able to launch 2,500 to 3,000 crores of inventory. And that's where we are as of now. We should be able to achieve the target that we set for ourselves in the beginning of the year and the way we talked last time on this.
All right. What about, debt? You said that you can comfortably raise about 300 to 400 crore of debt. You do have about 800 crore of free cash flow from operations. I just wanted to know, are you looking at any sort of fundraise in the very near future by either debt or equity?
Yeah, sure. I mean, debt for sure we can raise. The balance sheet gives us a lot of headroom. As of now, we sit on a surplus of around 200 crores in the balance sheet. And obviously, even keeping the debt equity ratio at a very conservative levels, to raise 400 crores should not be a problem. And that's what we want to do in the remaining part of this year. All in all, right now, the company is in the process of investing around 1,200 crores in near future, in next couple of quarters. And that obviously to the tune of 300 to 400 crores is part of that. And the rest will obviously come from platform and internal accruals, which are otherwise very healthy. Last two quarters, we have generated more than 200 crores already. And that's how this also is an important component. So all in all, 1,000 to 1,200 crores, including 400 crores, 300 crores of debt, is something that we are targeting for this year.
What's the launch pipeline looking like, Mr. Singhal, for the rest of the year? You mentioned that you're confident of from 900 crores, you're confident of going to 2,500, 3,000 crores for the rest of the year, which means around about 1,500 to 2,000 crores worth of projects in the second half. What's the launch pipeline looking like, and how much of your unrecognized revenue will also be recognized in the second half? If you could share a number on that.
So all in all, I can give you a sense of what is the total unrecognized value of sale, which is already there, not recognized in the books of account. That's more than 2,500 crores now, but that's the total number. And this gets recognized over a period of time, maybe in next 3 to 4 years. Apart from that, the fresh sales will continue to happen in the balance part of the year. As we said, last year we did 1,100 crores of total sales. This year we are targeting 35% growth over that. We have recognized part of that already in the year, 340 crores to be more precise. So all in all, we should be able to meet the targets on launches, which are 2,500 to 3,000 crores in total for the year.
And how much of your unrecognized revenue will you recognize this year? If that graphic comes up for you this year, you have close to around 2,500 crore worth unrecognized revenue as well. How much do you intend to recognize in the next couple of quarters?
So that will be a difficult call to make. I mean, the accounting standard basically makes it contingent on or how much of the project or how many of the projects get finally completed. So that's a little difficult to predict at this point in time. But this will be as per what we have been expecting, which is a growth of over 30 to 40% that we've been showing in the past as well. But difficult to predict the books of account. Booking side is more predictable, which is what we said last year. It was 1100 crores, and we should see a 35% growth over this 1100 crores for the year as a whole this year as well.
What would be the mix in the upcoming launches, Mr. Singhal? Would it be catering more towards luxury or towards the mid segment? Where is the demand coming in right now as you speak?
So broadly, the demand is coming from upper mid and luxury. Ahmedabad is doing great for us. We've had one of our most successful launches a couple of months back. This is by far our biggest launch. We sold more than 600 crores of inventory at the time of launch as of end of this quarter. So it remains upper mid and luxury market, broadly speaking. Affordable, we are not very significantly present in that space. But for us, upper mid is doing the best in that sense.
All right. And any further investments under the HDFC platform too? Will you be entering
Yes.
into some more partnerships?
Yeah, I mean, the platform still remains underutilized. As I said, 1,000 to 1,200 crores is the total investment plan next couple of quarters. And 1/3 of that should be coming from the platform. And the other two quarters should be coming from internal accruals and the debt that we just talked about.
Very quickly, Mr. Singhal, one final question. Is there any particular geography that you are targeting for further land acquisitions? The last time you spoke, you mentioned there might be some purchases in Bengaluru. Has that materialized?
Yeah, Bangalore, we just announced one very large, very nice project at ITPL Road near Whitefield. So Bangalore, one more high-rise has been signed after we signed one at Bannerghatta Road. Bangalore obviously is one of our prime markets. It's our second home, and hence we'll continue to consolidate it in that market. We should be able to kind of acquire 2 or 3 more projects within this year in Bangalore. And Ahmedabad obviously is our home market. Besides Ahmedabad and Bangalore, obviously we are targeting MMR as well. And by the end of this year, we should see some action happening on that front as well.
All right, take that point. Wish you good luck for the remainder of this year. And once again, a very happy festive season. Thanks a lot for joining in. At the bottom of your screen, you have numbers coming in from Symphony. There's a